let's bring on board Amit Syngle, MD and CEO at Asian Paints, because Asian Paints reported its numbers. We saw weakness coming in there. Volume growth was a mix that came in yesterday, and today also we're seeing some pressure coming in on the stock price as well. And despite that markets are seeing a run up, Asian Paints is not seeing that much of a run up, down almost 0.3% in trade. Let's bring on board Amit Syngle to talk more about their numbers and what are we expecting going forward from the company as well. Thank you so much, Mr. Syngle, for joining in with us this afternoon on ET Now. And I'm going to start with that volume growth number, because that came in at around 6%. Street was expecting that 8-9% growth in terms of volumes. Now, are you still maintaining your double-digit guidance that you've given in terms of the volume growth of the company? Does that remain intact, given that, considering that there's a late festive season that is coming in? So in the second half of the year, what should we be expecting in terms of volume growth?
So overall, yes, for this quarter, we got a 6% volume growth. The CAGR levels, if you see, are still at about 15% over a 4-year period. So overall, yes, the demand was a little depressed in this quarter in terms of what we saw, especially in the month of July, where there was very heavy rainfall. And progressively in August and September, there was some improvement. And we exited at fairly healthy rates in September, as we see in terms of the overall performance to that extent. So what we see is that definitely there is some benefit of deferred demand, which will kind of come in Q3. We are also seeing a longer festival season with Diwali in mid-November. So we have a good 45 days period or 40 days period in terms of which good sale can come in. And therefore, we are still kind of quite positive on Q3. And therefore, we see that Q3, we should be able to kind of get back to the double digit in terms of what we have spoken about the overall volume growth.
So, sir, last time you had mentioned that the performance was aided by rural recovery. What trends are you witnessing right now when it comes to the rural and in the urban regions as well?
So overall, when we look at Q2, what we have seen definitely is that the tier 1, tier 2 cities have grown at a higher pace as compared to T3, T4. This is a little bit of a reversal of a trend which we were seeing in Q1, where we were seeing equal growths coming from both urban and rural centers. But in this quarter, we definitely see that the rural centers, the demand has been depressed. We're also seeing a little bit of downgrading, which is happening in the T3, T4 cities overall to that extent. And that is another phenomena which we see. Overall, the B2B business has been fairly good in terms of what we have been able to achieve. So whether it is the institutional sales or it is the industrial sales, I think both have performed quite well in this quarter overall to that extent. So I think from overall demand trends, what we see is that this is the general area in terms of how the demand has proceeded. It was subdued a little bit because of the erratic rainfall, as we have seen, and also because of the fact that today we were looking at a longer festival season ahead. So there is some deferment of demand which is happening there.
Right, Mr. Syngle, what I also want to understand is in terms of crude prices, they have seen a surge coming in. So would you be taking any price hikes now as well?
So overall, what we have seen is a deflation of about 2% in Q1 in terms of our raw material prices, and we've seen a little bit of a deflation of about even 3 to 4% in Q2 as well. So as we see it in terms of going forward, obviously the geopolitical situation is now worsening, and we have seen a hike in terms of the crude prices. So depending on how the inflation behaves, our reason is that material prices will start going up by 1.5% in this quarter as we kind of look at. And from that point of view, I think we will calibrate to see in terms of what way we need to kind of really look at our prices going forward. We need to get a sense in terms of where the inflation is going as we kind of look at overall going ahead from the point of view of material prices.
So apart from crude, will the margin pressure also stem from increased competition, given the fact that Grasim will also be launching its product by the end of this calendar year?
So we've given a margin guidance at the PBIT levels of 18 to 20%, and we kind of stick to that guidance from the year beginning. Overall, what we see is that I have always maintained that there always has been competition in the market for the last 20 years. Overall, we have seen so many players who have kind of launched in the last 3 to 4 years also to that extent. So we do not see any pressures coming in terms of any new players kind of entering the business overall, because I think the brand is fairly strong and the supply chain strengths which we have are also equally strong in terms of taking us ahead. So we don't see any disruption happening from the point of view of any margins or any other demand which is going to get hit because of any entry of another player.
Right. Also I want to understand in terms of your international business, right? Because we are seeing in terms of headwinds coming in and challenges from the macroeconomic front, also in terms of currency depreciation and devaluations coming in some of the regions. What is the outlook there?
So we feel that I think the global market is responding slowly as we kind of look ahead. We have done well in Middle East market and parts of Africa, which is Ethiopia. However, I think the overall market in Asia has been hit very strongly, especially markets of Nepal and Bangladesh as we see it. Bangladesh and Egypt are also witnessing strong depreciation in terms of their currencies overall to that extent. So we feel that the global markets will be slow to recover, and we are not seeing an immediate recovery happening in Q3 in terms of the global markets.
Okay, thank you so much, Mr. Syngle, for joining in with us this afternoon on ET Now, giving us an understanding in terms of what we should be expecting from the company going forward.